Hi everyone. Now is the time for us to start. My name is Yuri.
Yeah.
I'm a co-founder of Cindicator, and I'm excited to welcome you here on the panel. Uh, Now we can say that crypto world is living in unprecedented times, and we are excited to have this conference. I will tell a couple of words why we decided to gather all of us together. We at Syndicator are currently looking to Asian market, and we have issued and released our new product, Stoic, which is providing service of automated trading in crypto. Also, we are currently going through acceleration program with 500 startups in Asia. We are the only one crypto startup in this experimental batch. We are excited to pioneer this sphere. So we gathered all of you together to meet you, to build these relationships and talk about the market, how we gonna see it, uh, what's gonna be in the future. So we will have 3 panels today. Uh, the first one is about the market in 2021. We will hear perspectives from VCs and hedge funds. On the second panel, we will talk about I, the most hot topic and our predictions, predictive analytics that was generated by hybrid intelligence, uh, the technology that is the core of our company. We have gathered some questions and we will talk about the most hot topics from different angles on the market. And on the third panel, lastly, we will talk with institutional players about institutional adoption of the market. So I hope and I believe that this will be a very interesting talk. And now I'm happy to pass to Sunjung. Sunjung will guide the first panel.
Great. Thank you so much, Yuri, and welcome to you. Good morning, good afternoon, good evening to everyone. I'm Sung Jung, Head of Business Development at Cindicator, and we are extremely happy to have you all today. So for our first panel, we are absolutely honored to have extraordinary panelists who will share their insight on the latest trends in crypto and hear their perspectives from the top VCs and hedge funds on the market overview in 2021. So we have William Bao Bean from SOSV, Christina Chi from Data Bento, Benjamin Tsai from Wave Financial, Bart Kellerman from Global Capital Acquisition, and Patrick Tan from Novum Alpha. So before we dive in, let's do a quick intro about yourself, and we will start with William.
Hi, so thank you so much for having me. It's a real pleasure. So I've been a VC investor for, now 15 years. We started investing in crypto in 2015, pretty early. I guess our early claim to fame is that through our accelerator, which is China Accelerator, which is the first accelerator in Asia, we actually accelerated a company called BitMEX, which for a few years was the #1 crypto exchange in the world, and now is the number 6 or 7 crypto exchange in the world. They went through our program. They went profitable through our program, and actually, according to Financial Times a couple of years ago, were worth $8 billion. We helped them grow 42x in the 12 weeks of the program. When they came to us, they'd been live for 9 months, and they were doing $250 a week in revenue by the time we were done. Helping them pivot to a B2C model, they were at $41,000 a month. Well, actually $11,000 a week, $44,000 a month. And, so far so good. So from that, we've gone on to become one of the leading blockchain investors in the world. I've personally done 30 plus investments in blockchain area, and really happy to share today. The great thing about having a unicorn go through the program and investing in one of the leaders in the space is it allows us to take a lot more risk. So we're happy to share today. Thank you very much.
That's really great. Thank you, William. So Christina, would you like to tell us about yourself?
Sure. Thanks, Sungjun, for having us here today. So my background's kind of weird in that I actually started my first company, which was a hedge fund back when I was in college about a decade ago. And we did high frequency trading, grew that fund to be probably one of the 50-ish top HFT firms in terms of a variety of different criteria. But anyway, we did have a bunch of larger external investors. I guess the biggest one would be SoftBank. And then we did trade crypto for a little bit. So here I wanted to tell you guys about actually, today on why we failed and actually why our trading in the crypto space didn't turn out really well. Whereas, trading in fiat currency in USD especially, worked out quite well for us in the end. And so, but yeah, really happy to be here. I guess recently, I actually left the fund very recently to focus on my second company, which is basically a data provider called Data Bento, where I had spent most of my time just dealing with data vendors, was really sick of it, and decided, why not just solve the root of the problem? Because it used to take us like 10 months to get data sets, and realize that, instead of doing that, let's streamline licensing and get people data in 10 minutes. And so, yeah, really happy to be here today.
Yeah, so this is quite different because hopefully Christina might give us like a view of the market. Next, we have Benjamin. Could you please introduce yourself?
Yeah, hi, my name is Benjamin Tsai. I am the president and managing partner at Wave Financial. We're a Los Angeles-based asset manager focused on blockchain and cryptocurrencies. We run a VC fund ourselves. We are also running the Cardano VC fund, along with two other crypto funds that we have. And I've also just on the side launched a whiskey tokenization fund as part of Wave Financial. Really not part of today's discussion, but thought interesting to bring up. My background is actually in traditional finance. I spent 15 years in Asia doing traditional finance. I ran structured products across both equity and fixed income across Asia for Merrill Lynch. And then I ran the commodities business. And I've also been on the buy side, and I spent some time running the alternative investments business for AllianceBernstein across Asia also. Very happy to be here today.
Thanks so sorry, I think I've been muted. Bart, would you like to go next?
Yeah, sure. My name is Bart Kellerman. I'm the CEO and founder of Global Capital Acquisition. And in 2001, I created a platform for quantitative-based hedge funds to allow them to help to raise capital and also to speak to audiences. And then I had two what I called Battle of the Cryptos events, in which we brought in crypto managers and ICOs and helped them to introduce them to investors as well. And so that's evolved, and we've had events and these capital introduction events in New York, London, and Hong Kong. And we're now planning to build another Battle of the Cryptos event in New York in order to get crypto strategies in front of investors. So it's been a little bit of a winter, but now that it's back and there seems to be a lot more widespread interest, and there are a lot of crypto funds that I'm seeing out there, and a lot of quant funds that have adopted their or adapted their strategies to the crypto world and have been somewhat successful. So we'll talk a little bit more about that.
Amazing. Yeah, we really look forward to listening to the quant side of crypto as well. And last but not least, we have Patrick Tan. Could you please share something about yourself?
Sure. Hi, good morning, everybody. It's morning right now in Asia, and thanks for having me, Songjung, and nice meeting everybody. I'm actually a lawyer by training. I've been a lawyer for the last 20 years. and I run Novum Alpha, which is the quantitative trading asset management branch of the Novum Group. We were running a crypto market making desk in the early days, when things were starting to get frothy, but we've been trading our own assets since as far back as about 2014, before the Mt. Gox hack. And we started off in market making, and we had some good arbitrage opportunities in the early days. Then we shifted to quantitative trading, a lot of algo trading. We've got a couple of trading desks right now, one in Hong Kong, one in London, and another one in Singapore, of course, which is where I'm based. And then sort of the rest is history. To us, we're just glad that we survived that winter. We take a market agnostic approach. We don't really have a view on the long-term dollar-based price of any particular cryptocurrency for that matter. So we do dollar-based denominated returns in a variety of stablecoins, and we also run managed accounts for some of our larger clients. And happy to be here and just to chat a little bit about some of the topics that we're going to cover today. So good morning.
Thank you so much, Patrick. So I think we'll get on with our topics then. We can start with William again. And what do you think is or will be the main driving forces in the crypto market for 2021?
So I think, I'm coming old school, right? So I've been doing public equities I started in 1996, 97. So yeah, I'm old. So one of the biggest drivers is crypto going mainstream. I'm on a business trip. It's a little bit strange to be on a business trip in these days, but I went from China, where in our office in Shanghai, we've been back in the office since early March. My Taiwan team has been back in the office like the entire time. We haven't actually had to be out of the office because there's no COVID there. But if the last month or so, I've been back in the US every day on CNBC, mainstream media, the pundits, and some pretty mainstream characters, and also hedge fund managers with large AUMs are talking about crypto and mostly Bitcoin. So you might not, for us, we're in the market. We've been in the market for 5-6 years or longer for some of you. 2015 as a traditional equity guy, kind of early, but also kind of late. But don't underestimate the power of the mass market and traditional institutions coming into the market. This is the biggest trend. It's a huge trend. And I don't think it's actually driving the recent run-up. That run-up is probably the expectation of institutions coming in, but the amount of exposure from institutions coming into the market has and will for the next 1, 2, 3 years be the main driver in my view. So I'll leave. There's many other drivers, and I'll leave that to my fellow panelists.
Shall I go ahead and pick someone, or does anyone have any?
Yeah, Benjamin's up, man. Benjamin, go for it.
Yeah, so I'll jump in. I'll build on that. I'm also one of the older guys, I guess. So I'll kind of bring the older views to this. I completely agree with what William's saying, although I think that some institutions are starting to buy. So I don't think it's purely just retail buying on expectation. And with that said, I think that it is very interesting. I'm actually seeing the interest really from a lot of commitment from institutional franchises. We're a client with Fidelity. Fidelity's built Custodian, so I find that very exciting. They're getting involved. With that said, they built it in kind of a separate subsidiary, Fidelity Digital Assets. It's almost like a sandbox. They can kind of clean it up if it messes up. It's not really part of their business. But we're now seeing people getting involved a lot more full effort. Standard Chartered has announced a joint venture with Northern Trust to do custody, and we're seeing really kind of a lot of the institutions moving into this space. One of the biggest ones I was very impressed with is DBS out in Singapore, really starting to support crypto as a very mainstream form of payments and so forth. So I spoke with them actually, and they're building that into their FX desk for institutional clients. This is not a little subdivision of some subsidiary in a different office with a bunch of guys. It's the FX sales guys that are also now selling crypto. So I thought it was exciting. I was shocked by how how much they are moving that forward, and I think that won't be the only one. We will see other institutions come in, and I think that adoption will also help drive a lot of liquidity in this market. There will be less questions about where do I buy crypto. My buddies are now buying on PayPal. They're now buying at all sorts of different places where it's much more retail. So, and I think all of those things are pointing positively towards this market. That's why I think I'm similarly bullish like William.
Just a quick comment. Oh, sorry, Patrick. I'll just go.
Sorry, Christina. It's just that I mean, because Benjamin was talking about Singapore, I just wanted to chip in. Shout out to Singapore, where I'm from, and I appreciate that. And it's thanks for noting that, Ben. I think it's you'll see that in Singapore, actually, we were one of the first to institute a comprehensive payment services act to deal with digital payments, to deal with digital currencies. Obviously the DBS move for the insiders didn't really surprise us. We've been talking to a lot of them, and you're absolutely right. It's the main team. It's not like with Fidelity. Not that there's anything wrong with that. It's not like plausible deniability. We're not just making a little cell there, and if anything goes pear-shaped, we'll just hive it off and pretend it didn't happen and just walk away. So you're right, and I'll also draw your attention to the fact that there are a lot of big names in the exchange business which are all domiciled here by a corporate structure known as foundations. So you've got big companies, OKX, Huobi, you've got Binance, and they all have the HQs here. They all have got big office presences here, and we can meet up with any of their colleagues, before the troubles, of course, which is quite easily, and that definitely, I think, is a big step. But what I'm really excited about, and if I could, I'm going to hand off to Christine, of course, in about 10 seconds. But what I'm really excited about is to see Janet Yellen be appointed as U.S. Treasury Secretary. She's somebody who's familiar with the cryptocurrency space. She doesn't need any guidance on how to use an iPhone. I'm excited to see Gary Gensler. Prospective head of the SEC. He taught blockchain and cryptocurrencies at MIT. So again, not somebody who needs some guidance or instruction manual to use an iPhone. And that's helpful, because if you don't understand the technology, you can't regulate. And if you can't regulate, then let's not even talk about institutional participation. That's just not going to happen, And we need the regulators to come in. And the pullback that we saw last week, when we saw Bitcoin get flushed down to about 30,000, just below 30,000, because people were afraid that regulation was going to come in. Really, why should you be afraid of regulation? What is it that you're doing that you're so afraid of that you're afraid of regulation? So it's a good thing. I think it's a good thing. I think that when the rules are set, it gives people an opportunity to find opportunities. But when nobody knows what the rules are, and it's anything goes, and it's a free fall, which is what it was like in the cowboy days, and I've been there, trust me, it's no picnic. That's not a sustainable business, I can tell you that. I mean, yeah. So sorry, Christina, sorry to interrupt. I just had to do a shout out for hometown.
Thanks, Patrick. Patrick, you make such a great point. I was going to say very similar stuff. Just wanted to also mention a couple things. So in terms of my personal story, we traded crypto back in 2017, basically just riding the wave when it just became, one of the first waves of hype that happened. And that was like the year, that sounds like forever ago, but basically that was a year when like every other hedge fund event was about crypto. And actually many of the answers were similar, by the way. People were like, oh, institutions are going into crypto. Goldman Sachs is doing crypto. CME has Bitcoin, like all these different institutions going into it. But there are some differences, and I'll talk about that later, because 2021 is actually really different from what it looked like back, only 4 years ago. But basically, back then, there were more people trying to start crypto funds and exchanges than regular, fiat funds and exchanges. And there was, so basically just showing like there was a lot of hype around this product. And I guess back then, in a nutshell, our crypto strategy did really terrible because the ADV at the time was around $5 million total. That was it. And that's one of the biggest differences, by the way, was across all cryptocurrency exchanges, only about $5 million was, that's the average daily volume. It's really tiny. I'll give you a sense of how tiny that is. We're a small HFT fund relative to the Citadels and Two Sigmas of the world. And we were trading almost $1 billion per day at that time. And that's small, by the way. But it's over 200 times more than the entire crypto ADV, which is insane, right? Like even if you trade 1% of the ADV, that's considered significant for a market. We were 200 times more. So even as a small fund, we were just too big for the crypto industry, just given the nature of our strategy. And if you know anything about HFT, it's just that you need to, you do well in highly liquid markets, essentially. But so there's some differences though. 2021 is very different from 4 years ago, which seems like forever. So just talking to like hedge fund CEOs in our industry, the institutional interest this time around is a lot more genuine than it was back in 2017. So like back in 2017, right, CME did the whole Bitcoin thing as a PR thing, by the way. Like if you talk to the CEO of CME, they'll be like, yeah, it was purely a PR move. Like it wasn't even because they thought they were going to make any money off of this. They have 2 million products on CME, something crazy like that. And so, you know, Bitcoin's just one of the other ones. And then they ended up getting rid of that because that program was a complete failure. But anyway, so back then it was all because of PR momentum, but now it's because of other reasons. There's actually more liquidity in the markets. I mean, like this past week, I think we reached up to like 5 billion in ADV, which is, you know, orders of magnitude higher than what it used to be in the past. You know, and going off of like Patrick's point, has the industry fully matured, right? Absolutely not. There's risks that every trader, you know, just has to accept when you go into the space today. And, you know, it's just like the fact that even this week, right, was it one person who single-handedly tanked the markets last week and wiped out like over $100 billion in 48 hours? Like there's risks like that, right? You can, and regulations, you mentioned like Janet Yellen, Christine Lagarde, right? People who are, they're still called cracking down on the space, which is actually a good thing, by the way. And I'll talk more about that later because I was a part of the HFT crackdown on us, right? So I've been through that and done it, and it's a good thing, just so you guys are aware. But you know what we learned from this year, or even just this week from the regular markets, GME, Nokia, BlackBerry, GameStop, whatever, right, is you just never know what kind of black swan events will happen this year. And the best thing you can do in crypto as well is just, you know, stay curious and expect the unexpected. And I will end there. Thanks, guys.
Great, thank you so much. Maybe we can go on to the next topic around, so I recall Benjamin briefly mentioned about liquidity, and I wanted to ask, how will liquidity and market discovery change this year?
Sure. I guess my name's mentioned. I'll jump in first. I actually don't have a particular view to liquidity other than that I think it's going to increase. I think it's anybody's guess as to how much is going to increase. We actually trade in a bit in Bitcoin derivatives, and we use places like Deribit and Bit.com and so forth, and we have seen a significant increase there. We're expecting that increase to potentially even be bigger than the Bitcoin one, although that has not been the case as Bitcoin has generated a lot of new interest. But overall, there's definitely more players that are trading in all of these things, and we are seeing an increase in liquidity. I'm sure Christina can comment on liquidity a lot better than I can.
Yeah, you're totally right, Benjamin. That's exactly what I would say. I mean, the liquidity is, there's a lot more liquidity, orders of magnitude more than there used to be. I will say, will it, be a completely liquid market where HFT firms will all thrive and do extremely well? I don't actually think so, unless there's a crazy black swan event where, let's say, if Wall Street Bets does, or let's say a shorting, hedge fund decides like they're bearish on Bitcoin, and then suddenly Wall Street Bets comes in and decides to short squeeze. That situation can happen in the crypto space as well. And so if something like that does happen, then we might see a lot more people talking about this right now. But so far, at least in the news cycle this week, right, we all know what it's been about and how crazy and exciting and kind of unique and different it's been. And so you just never know. I guess on my end, it's just we never want to underestimate the power of small traders and large groups, right? And so yeah, it's a good thing though. I do hope that there's more liquidity. There's going to be more people who are not just buying and holding, which has been the trend in the space and for forever, but rather also speculating and selling and actually participating in the markets a lot more actively. So that's my personal hope. At least that's what we do as a fund. But totally understand like other folks have different agendas, want to do different things. So yeah, we'll just have to wait and see.
And sorry, just to add to Christina's point about liquidity, I think liquidity is something that every trader knows about, and it's something that we monitor very closely. We use a variety of data tools to actually monitor the liquidity that flows into and out of exchanges. One of the places where it's hard to actually gauge what the genuine levels of liquidity are is especially in the derivatives market, which is where we are the most active. We trade primarily Bitcoin and Ether futures. We don't go out beyond that because I'm a risk taker, just like the next guy, but those fringes of the market get pretty put hair in your chest pretty fast. And as for an Asian dude, that you should know that that's not possible. So short of participating in the whiskey fund to keep my sanity down, just keep my sanity in check, by going out to the more risky fringes of the market, we do monitor liquidity quite well. And I'm absolutely on board with Christina's point, which is that retail investment, let's not even just talk about crypto, but retail investors in the equities markets, it's it's bonkers. I mean, like, look at GameStop, look at Tesla, look at Apple. This is like, I mean, pardon my French, but that's batshit crazy stuff. I mean, every single thing I've been taught in law school, in finance school, everything gets thrown out the textbook. Nothing makes sense anymore. This is 2021. All bets are off, all on, as the case may be. And what we're seeing though is that I want to call it the wisdom of the crowds, but I'm not so sure, because, presumably when you have a large enough number of people taking bets on something, they should be right. One thing I have grown accustomed to this space is that oftentimes everybody thinks they're right until they're not, and then when they're not, everybody's rushing for the exits, and you could be in a really pear-shaped place pretty fast. So I think liquidity depends. Liquidity is a sort of like a double-edged sword. We want to see quality of liquidity. We don't just want to see liquidity for the sake of liquidity, and that's the thing that we have to look forward to, and which we monitor very, very carefully, where the quality of the liquidity is. I'll say that, at least from the Singapore perspective, in the early days, not to say the Asians are profligate gamblers, but we do have that tendency. And a lot of the Asian family offices were more than willing to take a gamble on what is this crypto? What is it? What does it do? I don't know what it does. It's okay. I'll take a roll of the dice on it. But that's the psyche, and I lived in the US for many years. So I'm able to see both sides. I can see where institutions are important. I can see where gambling is important. Not that I condone it, nor do I, disagree with it. I mean, your choice. But yeah, that's what we see. So the quality of liquidity, I think, is an important thing. And I think that's something that we should pay attention to moving forward. I think that as too much retail comes in, we really have to start to be careful about those bubbles and the pullbacks. It's like a schizophrenic person. One day he's okay, the next day he's not. That's not a way to trade a market long term.
So just one last point to add on. I mean, so the great thing about Bitcoin is that it's a product, right? It's got volatility, and so it doesn't matter whether you're from the Eddie Murphy movie. If anybody knows who the hell Eddie Murphy is, Trading Places, they used to trade orange juice futures. Like, most people don't really care that much about what you're trading. The underlying doesn't matter. It's about volatility. It's about volume, right? So if you can get in, you can get out, and there's volatility. That's a product. And I think that the biggest change that we've seen over the last 2 or 3 years is that there is now enough liquidity where that, and the most important thing is there's enough volatility that there's opportunity. And that's where the volume, if you looked at the volume over the last month or 2 months, or like over the last year, the volume is spiking because people understand that it's an amazing product and it's safe enough, whether you can get in, you can get out, whether it's through BitMEX or Binance or Huobi. There's many different channels. You can take your pick. But the key thing is that the product is not Bitcoin, it's not ETH. The product is volatility. Thanks.
I'll jump in, if you don't mind, with just one last comment on all of this, and it may sound a little bit negative. I think the liquidity we're seeing, unfortunately, is the liquidity that really a lot of the governments around the world are providing to all of the investors / gamblers of the world, right? The whole GameStop thing is just kind of funny. The Tesla thing and so forth. A lot of that is just really liquidity that government's printing to try to stoke inflation, support the markets, and support the economy and so forth. I think the official stance is supporting the economy, but what's happening is that money that's being kind of, as some people call it, helicoptered in, is now being spent on investments. It's flowing into not only the markets, it's flowing into hard assets. I do real estate investments here, and real estate in Asia is always very crazy, but it continues to be bubbly, and we're seeing that flow into crypto also. So on the one hand, I'm very excited about more people looking at the asset class. I'm more excited about institutional adoption. But on the other side, I think some of the froth that we're seeing in crypto is also, to a certain extent, similar to the froth we're seeing in the equity market and every single other asset in the world, basically. So that is the reality of all that excess capital being available.
Okay, thank you very much. So I think we can go on to the next topic. I think Bart hasn't had a chance to speak yet. So how do you think will the regulators approach crypto now that both the Wall Street and Main Street, they are both in?
Well, it's a very interesting question because one of the things that that I've done is I've helped out a group of guys out of MIT who started a brokerage firm for crypto called Floating Point. And they've been getting a tremendous amount of money lately. And also they're noticing that there are more exchanges that they're dealing with that are living within the guidelines of regulation. They're sort of being A players. They're really trying to live within the guidelines so they have quality product that they can make available to the marketplace. I think the fact that there's been an ETF that was passed in Canada, and I think there's another ETF coming out. That's a BTC ETF, and there's another Ethereum-based ETF that's coming out. So regulators are starting to embrace the crypto market, understand it a little bit better. And here's something that's very, very interesting, and that is, think about this. All of these programs that at least the U.S. government is launching, where we're helicoptering money into the hands of the individuals, we're basically distributing that money, and we don't really know where it's going. Benjamin, you just said that a lot of that money is going into investments. Well, it's really supposed to go into helping people survive during this time at which they're not working, they're not making money, pay for their rent, pay for food, but it's finding its way into many different sources. What if governments were able to distribute money into the economy through crypto and thereby be able to track it? And I think the Lagardes of the world are going to come to the realization that they can control global economies or their own economies much more efficiently and understand and track their distribution of assets much more accurately if they use crypto. So I think they're going to start understanding that. They're going to start embracing it and hopefully use it to leverage some of the giveaway programs that they have. That's as far as custody. I mean, as far as regulation is concerned, that's sort of my perspective. I just thought I'd throw that out there.
Thank you very much. Do other panelists have something to add around regulations? Because I know there is a lawyer amongst us.
I'll just say that when it comes to regulation, we've seen what I'm not an American, but I do watch C-SPAN for some painful, strange reason. But I've watched I've watched the senators and the Senate hearing committees on the technology when they're grilling the CEOs of the tech companies and stuff like that. Obviously, the news media likes to take out those funnier sound bites and stuff like that. But I'd say for the most part that regulators do have a rough understanding, thanks to their staffers, about what the technology is and what's required from the space. I think if you've seen the difficulty with regulating even social media companies, which provide you with or any media company, which provides you with a very obvious target because they are a corporation, there's somebody to go after, there's a CEO or somebody. It's easier to regulate for stuff like that. It's easier to try to launch an antitrust sort of action against them. It's easier because there is somebody to aim at. But when you are trying to, regulate and crack down on, say, Bitcoin, how are you going to do that exactly is what I'd like to know. Because it's a bit like trying to use a bucket to scoop all the water out of the ocean. I mean, you don't have control over that. It's decentralized. Who are we going to kill? Let's kill Satoshi, right? Okay, great. Where is he? Who is he? We don't even know if it's a him. I mean, I think that there is a certain naivete when it comes to trying to enact effective regulations. I think what you can do is try to regulate for the choke points, how do you get fiat currency on and off the ramps. But even then, we've seen how whatever your views on Tether might be, whatever your views on any specific stablecoin might be, I can tell you that out over here in Asia, it's still being used as if it's just as good as a dollar. And that's what really matters at the end of the day, is whether or not enough people are willing to use it and accept it for goods and services. And then nobody really cares so much. Well, I mean, forget about the Fed. Who cares? I'm going to use Tether as much as I like out here. I don't need, I don't need Jerome Powell's permission to use Tether out here. We're just going to use it. And I think that's the very practical aspect of crypto that you see. And I mean, especially in Asia, I traveled to the US a lot. I mean, before the troubles, I've seen both sides. And I have to say that that in Asia, at least, it's very practical. It's a very practical approach as to why, as to how to regulate. And from that perspective, if you look at what Singapore has done, they've taken a sort of a pragmatic approach. We know we're a small country. We know that there are limits to what we can and cannot do. And we try to just, err on the commercial side of things. Short of there being specific, quantifiable, clear, and large degrees of harm that is going to be caused to society, then let's have let's have innovation blossom. Let's have technology blossom. And I think that what worries me though is that of course, is that if countries use their digital dollar as a form of social credit or social currency, and then start to monitor the activities and the flows of their citizens, I think that just deep down on an ideological level, you might witness some blowback. And for all you know, that actually might have a positive effect on these decentralized currencies, because it's a form of resistance as to to rage against the largesse of government. So I think that when it comes to regulation, it's a tricky business. I think that the answer shouldn't be that we shouldn't regulate. No, that shouldn't be the answer at all. It shouldn't be just we do these things not because they are easy, but because they are difficult. And I think that should be the persisting. And I think that's what you're going to see this year. I think you might likely to see that with the Democrats now. They've got the House, they've got the Senate, they've got the White House. I think you're going to see a lot of that this year. I think Gensler, if you've looked at all of his writings over the past decade, what he's written about in terms of crypto, and if you've seen Yellen, I think we are going to see a push in that direction. I think it's a good thing. I think that unless you've got lots of skeletons to hide, you don't need to buy a closet. So it should be welcome, embraced, but I will add that it's not as straightforward as a lot of regulators may allow themselves into thinking. We are quite fortunate in Singapore that our policy and lawmakers here are relatively astute. The good mandarins and the good technocrats who understand the business of doing business. And they support that ecosystem as well. But I think when it comes to the world at large, especially in liberal democracies, I think it becomes a lot more tricky. I think that you'll get regulation, but all regulation will do is invite the institutional investors in, and then that's when you get all the rent seeking and stuff like that. I'm not saying that's a bad thing. I'm just saying that's just reality, and I'm a practical person.
Just a quick comment. So when I first started the high frequency trading fund, everything was like rainbows and unicorns in our industry until the day when Flash Boys came out. And then all of a sudden, all the SEC and, all the NSA, I don't know, all these organizations, basically, all the regulators came after us. And, suddenly regulatory scrutiny was just, when you Google HFT, right, everyone's like wondering, like, are these guys front running? Will we go to jail? What's going to happen on the regulatory side, right? And it was actually, surprisingly, it was a good thing. I was worried, like, will the government shut down? They totally had the potential to shut down high frequency trading, just like with crypto, right? A lot of people in the comments are worried, like, what if the government decides to shut down this altogether? It's actually highly unlikely. And actually the reason why, and a lot of it is because, cryptocurrency is going through so much type of scrutiny today. And so just to give you a sense, for high frequency trading, it was like payment for order flow and like so-called front running, which is how Michael Lewis labeled it. But anyway, and then for crypto, it's stuff like money laundering, right? Which is, it's true. There are people who do money laundering in this market, unfortunately. And so is there any way of kind of catching them, right? It's also lack of control. And someone also mentioned like the fragility of the markets, right? Someone being able to just sell off, $100 billion of value in a day, like in the regular markets, that would have been cut off a long time ago, right? Because there's exchanges and kind of organizations that regulate that kind of stuff. But anyway, so, a lot of the actions this year does depend on who the administration hires. We have talked to a lot of folks in the SEC over the course of pretty much a decade. And, what's surprising is like these people, you always think like they're these old people who have like no experience, like can't use a phone or whatever, which, maybe used to be the case, but thankfully I think it's gotten a little better. Like, there's like PhDs in like computer science and people who used to work in high frequency trading who are now at the SEC. And that's really incredible because they're like more forward thinking, more innovative. And, they're trying to come up with a solution that will allow people to still participate in these markets while getting rid of the bad, the 3 or 4 bad players, right? Out of 100, right? There's always like a couple of them, but you want to get rid of the bad people while keeping all the great people and the genuine folks out there who are just using these things to either just to trade or to transact, to buy stuff, like you guys had mentioned. So it'll just depend on who the administration hires, who are their advisors, who's really helping them out. And Are they crypto trading experts, or are they just famous naysayers? I'm guessing, like, a lot of these people actually are experts in the space, which is a good thing. So I am pretty optimistic that the regulations coming out will hopefully be helpful to the industry, and that they'll consider, with high frequency trading. Just a really quick example, by the way. One quick thing that the regulators had actually considered was like basically, what do you call it when you like what IEX did, which is like, where you stop the time or whatever. You can only trade at like intervals, but you can't like trade at the nanosecond resolution, and slowing everyone down or whatever, right? And like clearly that didn't come to play in terms of going across the entire world or even across the US. Like it just wasn't a thing, because there was actually loopholes in that potential law that was that was literally, who came up with that? Someone who didn't have experience in the industry. But anyway, so in crypto there's going to be people like that who try to come up with their own solutions, and that's okay. There's going to be exchanges who each try to come up with their own solutions to kind of get rid of potential issues that might come up, and it'll be great. I think it's all part of the innovation atmosphere, and it'll be awesome to see kind of what people come up with, and also how the administration kind of addresses those challenges. So I'm pretty optimistic this year about where things are going.
Thank you so much, everyone. I'm quite conscious of the time. We are 10 minutes, overrunning, but thank you so much to all the panelists. It was so great having you all. So I think we will go. So for our second panel, we have 2021 predictions from 163,000 analysts and AI. I'm sure you were probably thinking, what was that? But before we start the panel discussion with our star panelists that we have today, I would like to do a quick intro of Cindicator's hybrid intelligence. Can everyone see my screen? Great. So since 2015, Cindicator merged wisdom of the crowd with AI to predict future events. And over the past 5 years, we've accumulated 163,000 registrants from 135 countries who make forecasts about the market. And then we enhance this data by running it through our machine learning algorithms. The platform is available on App Store, Google Play, and also as a web application. And you can scan the QR code or visit Cindicator website. I'll leave the link in the chat. We previously successfully predicted the market reversal of Corona crisis. We also predicted Brexit results, Biden and Trump elections. And for years, we specialized in predicting the crypto market, and we've developed algorithmic strategies of these predictive analytics, and we execute these strategies with our in-house trading platform. So we would like to share our 7 juicy predictions for 2021. And joining with us on the discussion, we are extremely fortunate to have celebrities in both the worlds of crypto and AI. We have Konstantin Kogan from Wave Financial and Jesus Rodriguez from Into the Block. Thank you so much for your patience. I know we are overrunning a bit. So could you please tell us a bit about yourself, Konstantin?
Well, first of all, hi, it's a pleasure of being here. And for celebrity, I don't consider myself as a celebrity, but listen, I will take that, so no problem. So yeah, it's an honor to be here. And a few words about myself. I'm a partner in BitGo Capital, and I'm a managing director in Wave Financial, and been researching crypto since 2012. I've been investing myself. Personally have a career starting from future trading and then spot trading, and slowly I would say evolved into more deeper dive into the crypto hole. Yeah, now I consider myself a person who is just a supporter of this new movement, and try to do it on all levels. Ben Tsai, my colleague, was in a previous panel. He basically introduced Wave, so I'll just say a few words. We regulate it. We hold an IRA license, and we do a lot of research, and we invest in projects. We have several hedge funds we're running, so happy to be here.
Thank you, Konstantin. Jesus, would you like to share more about yourself?
Yeah, first of all, thank you for having me. And a quick intro about myself. I'm a computer scientist by trade, distinguished engineer at Microsoft, where I run the first technical team that built the Azure Cloud Platform, did a tenure building quant systems in a prestigious Wall Street firms like DRW, a couple of exits as an entrepreneur these days, so became an active investor these days. I'm the CEO and chairman of Into the Block, we're a venture-backed crypto analytics platform that use like very cutting-edge data science, machine learning, deep learning techniques to extract intelligence about crypto assets, and also have a second division that works with some of the top hedge funds in the market, building quant strategies for both CeFi and DeFi, very focused on using deep learning signals. So to this day, Into the Block in 18 months has over 120 clients, including some of the top brands in crypto and over a dozen of the top hedge funds in the market.
Thank you so much. So we'll go through each of the prediction one by one. So at Cindicator, we have 163,000 analysts who make predictions, but we have identified super forecasters amongst them who are the top 0.02% of the crowd. So you will find two segments, the crowd and super forecasters. So the first question we've asked to the crowd was, enter 5 tickers you would long until the end of 2021. And we can see that Bitcoin is leading for the crowd, but Ethereum is the top choice for super forecasters. Jesus, maybe you would like to give us some thoughts on the projection for Bitcoin and its significance for this year.
Look, so I tend to look at things more from a sort of a mathematical instead of the macro standpoint. But if I have to relate to this prediction, I'll say obviously Bitcoin has the eyes of the institutional investors. A lot of the institutional adoptions, the bigger institutions entering the market, Bitcoin is the preferred vehicle. Ethereum is also obviously pushed by mechanisms like decentralized finance and NFTs and movements like that are happening in the Ethereum space. DeFi in particular is fascinating. What's happening there. So that in terms of acceleration, I think Ethereum is definitely a good place to be, but keep in mind that just every institution like PayPal or Square or MicroStrategy that enters the space is certainly consolidating Bitcoin's dominance more and more.
Konstantin, do you have some points to add?
Yeah, I actually would agree. From a macro perspective, I think that Bitcoin will still hold its dominance just because that is something, as a previous panel, we're talking about it. So just not to repeat that, Bitcoin is just easier to explain. It's like, so it plays the role of store of value and this digital gold concept. So it's just easier for bigger institutions to enter it first, and therefore the billions, so if not trillions of dollars will flow there. And then like as a cascading principle, then it will go further, like, with a deeper analysis of other alternative crypto assets, like, then I think, yeah, I would agree actually with this potential chart. I do, I do think that it's interesting. It struck me, like, the prediction about XRP. I mean, I get it, like why super forecasters like recently were a bit bearish, I would say. But it's interesting, the gap between the crowd and the super forecasters for the XRP, just astonishing. And I do think the ADA is a little bit undervaluated because we personally do a lot of research on Cardano, and I should say that the things that are rolling out, like they're going to be exceptional this year. So they might actually outperform like DOT or Link, potentially. So yeah, that'll be my 2 cents.
So looking a little bit into details here, like I don't I mean, it's hard for me to think about what would be a good trend for something like Litecoin. I mean, Litecoin is a project that I always had a hard time understanding its value in this day and age. Things like I agree with the sentiment around XRP and ADA. Uni is particularly interesting. I was actually looking this morning. I had to do a different session for the North American Bitcoin conference, and I was looking at a few governance tokens. And today they look amazing. Like Comp Uni, mostly 100% of the token holders have realized profits these days. But just a few months ago, that wasn't the case. Like I remember doing a couple of sessions about DeFi and showing some analysis about this. It was a horrible investment. And just happened that the rally on DeFi has completely turned things around. But it's very interesting how much weight super forecasters are placing in something that is essentially a governance token.
And if I may add, I actually think the Sterling Lumen, like, also like might be, it's a great project, so nothing to against it. But I think that with the advance of DeFi, such projects as Aave and Synthetics, they might actually become one of the top 10 contenders. Like, that's with the movements and the news that are floating there. Like, I actually consider they're probably going to be top 10 like sooner than we think about it.
Yeah, Bitcoin and Ethereum are obviously front runners. I think if you need to pick things that could have a symmetrical return, I mean, I have to say, I mean, the Polkadot is certainly fascinating. The race from the launch to where they are today, it just seems like one of those projects that could give Ethereum some headaches in the long term. And certainly, despite of the controversies, and these guys are a client of Into the Block, but Chainlink, I think, is very interesting. It fills a gap in the market, and their performance has been sustained through different market cycles. So it's very interesting to see what's going to happen with them.
Just to wrap up this this particular forecast, I would also like to mention that Uniswap was very we received a very high number of mentions in Uniswap. That kind of makes sense because everyone's using Uniswap to get all these DeFi gems. So it will be very interesting to note if the liquidity or like if these interest might actually outperform Binance, which is the centralized exchange. And we'll see if the market cap for Uniswap might actually outperform BNB this year. So we can go on to the next prediction. So we'll just touch on this. So what we do at Cindicator is that we ask the crowd twice a week what their thoughts are, what their predictions are for the maximum price and the minimum price for Bitcoin throughout 2021. And the most recent reading we took from the crowd, which was just 3 days ago, expects Bitcoin to reach 60K as all-time high and 20K as all-time low. By the way, this is not an investment advice. This is just the thought that comes from these 163,000 analysts. So maybe it's still January, and if Constantine or Jesus, if you could give like a quick stab at what you think at the max price or minimum price might be for Bitcoin for the coming 11 months.
Jesus, I'll let you start.
Oh, please, no. I'm not brave enough.
Well, to be frank, I really hate this type of questions. I appreciate the ability to predict something like that, but it's so tricky because there's so many factors in the space. I would say, let's put it this way: instead of predicting or like disapproving some of these predictions, I've recently listen to some of the thought process of one of the top investors in the industry, and like who I really admire, Kathy Wood, and her stance on like very systematic of how she approaches things. And in their prediction and in ARC, they look at a lot of parameters, and I would say one of the ideas that she introduced that, look, recently OCC allowed, federally chartered banks to custody Bitcoin, that the banks allowed now to use blockchain nodes, for the faster and cheaper settlement. Previous panel talked about the new SEC chairman Gensler, who is very pro crypto, and he taught at MIT. So I think, and if we look at the opportunities of how the treasury play will come out, and more companies will actually, as MicroStrategy, Square, etc., will actually allocate billions of dollars into crypto. I think if this trend will continue, so this, honestly, the sky is the limit, because it's very early, and it's still I actually closely follow all of the major companies right now, who are allocating to crypto and for the treasury play, and it's only 40 billion at this moment as we speak. I believe once it's going to get to at least $1 trillion, so then the price would reflected probably 1.5 times, at least. So that is the probability I actually look through.
Thank you very much.
So so good thing I didn't have to say that I hate the question first, but Niels Bohr, the one of the fathers of quantum computing, used to say that predictions are really hard, particularly about the future. So this type of thing is just really, really hard to forecast. I spend the bulk of my days in sort of medium frequency type predictions, so it could be inferred with data points from a more pragmatic standpoint. And one of the things that we learn is the longer you go in a time horizon, it's harder to make an accurate forecast. For something like this based on macro factors, it's just really hard. There is a lot of factors that are pushing momentum for Bitcoin. Fundamentally, institutional adoption. We have to think that there is going to be multiple corrections along the way. But if you want an analogy, I think 2020 has tested a lot of the fundamental thesis around Bitcoin, whether it's an inflation hedge, whether it behaves like digital gold, like many things like that. And there are numerous theories, but at this point, Bitcoin behave like a highly volatile equity. And I even published an article about this in CoinDesk or somewhere that I think more than a highly volatile equity is what in quant circles is called a high sentiment beta equity. That is a type of stocks, and when large cap stocks are trending, that type of equity tends to trend like twice as with as much momentum. So from that standpoint, if you think what's really happening with highly volatile stocks, what's happening with Tesla, with GameStocks and things like that, you can see multiple rallies happening in Bitcoin, and it's probably the closest analogy. Now, is it going to be 60,000 or 600,000? I have no idea. One thing that I learned in my quant days is that we tend to overestimate 12 months. So a lot of people, when they make forecasts based on macro, they tend to overestimate 12 months and underestimate, like 60 months or things like that.
If I may add to this analogy, because I love the comparison with high sentiment beta, and it is like, if you look at the entire market cap, it's actually as one large cap stock. That's the entire market cap of Bitcoin. So, but what is interesting, the comparison, if S&P 500 companies would put 1% of their entire volume into Bitcoin, the price will probably be increased by 40,000 in one shot. Now, whether it's going to happen and when it's going to happen, that's a big question, right? But this is just another analogy to see how it may play out.
Thank you so much.
There might be a couple of other things conspiring to push, like fixed income being mostly nowhere, right? Like there is not a whole lot of investment going on in fixed income right now with interest rates on the floor. So a lot of that money is going to move into alternative, and Bitcoin could be one of those.
Great. So we have a few more predictions to share. So I'll go on to the next one. We have like 4 more. So would the total value locked in DeFi hit $50 billion in 2021? And our crowd gave an assurance around 80%. So that's kind of like probability that this event would happen. And super forecasters also predicted around the same. I know we've kind of touched on DeFi, and personally, I think I also feel like similar because I've had some experience looking at some new DeFi coins that were like less than 24 hours old. And then there's like millions of dollars being locked in there because people are trying to do this yield farming and changing across different coins and all that. So I wanted to hear your thoughts on the total value locked in DeFi for this year.
Yeah, so here I might have an opinion. So we do a lot of work in this space. Into the blog today, there is over 60 analytics just for DeFi protocols, and we build high frequency trading and passive investment strategy, quant strategies with funds in DeFi. So we have been tracking the activity here very, very closely. In terms of a macro thesis of the market, 50 billion is actually not crazy. It's aggressive. But I heard multiple tier 1 VC firms sort of refer around this number, and there could be a couple of events that could catalyze that, right? Like more activity in AMMs and things like that. I think in DeFi overall, there are 2 trends that are not going away. One is lending, and another one is automated market makers. I think there is a lot of other peripheral things happening, but I think those 2 trends are driving the momentum, and they're likely to be here for the long haul. Now, the thing that to realize about DeFi is that a lot of what's driving the activity is yield farming and things like that, and that's likely to correct, or even in some scenarios go away at some point, right? It cannot continue going like that forever because we wouldn't have a market, right? It has to become more efficient. So at one point, we have to ask, like, you know, when yield farming is really not there, when that party ends, right? When the music stops, like, what's the real value of DeFi? And I think it's related to the programmability, the automation that it brings to automate financial primitive in a way that we haven't been able to do before. A good metric to track, I think value log is misleading as hell, but a good metric that I think is a good indicator of the ecosystem is how much money is moving from Bitcoin into DeFi. I think that one is always something.
你就不错，还蛮多东西吃啊。
Sorry, I was saying if you pay attention to how much fundings are moving from Bitcoin into DeFi and vice versa, that's always a good indicator of the market.
Thank you. If everyone can mute other than the panelists, thank you. That would be great. So shall we go on to the next question? Will the SEC approve Bitcoin ETF in 2021? Crowd had a higher sentiment towards that approving, and super forecasters are quite low, 55%. What are your thoughts?
Probably I will start, like, also like a quick 2 cents on the previous one. I do agree with Jesus. And if we look at the like total TVL, like, you know, just starting from October, it was about 10 billion, like, you know, and TVL, and then now we are roughly right now at 25 billion. So I don't think the prediction is crazy about 50 billion. It's quite realistic. To briefly go about the ETF, again, it's it's a attempt number 24, or we don't know the exact number, so it's really hard to predict as well. I would say, if we're going to stay over $1 trillion market cap for a significant amount of time, and we like the more institutions are going to come into play, and we hear the news about the BlackRocks of the world are coming in, and derivatives market are becoming more robust, the new liquidity entering the market. So I think it's quite realistic. Now, whether it's going to happen, to be frank with you, I have no idea.
Yeah, I think I'm more skeptical, and particularly in a year, in a 12-month cycle, new administration that has a lot of things to deal with, an asset class that is still, I mean, it has to reach multiple $1 trillion. I think Konstantin was referring to Kathy Good in a previous question. She just was on record today saying that it's probably Bitcoin needs to get to a 2 trillion or something market cap before an ETF becomes realistic, and she knows a thing or two about ETFs. I think in a 12-month cycle might be aggressive, but you know, it's, I mean, who knows?
Okay, we'll go on to the next ones. I think we have just three more. Let's go really quickly on these. Will stablecoins exceed 100 billion in terms of market cap in 2021? We have quite high sentiment. Do you guys have any insights on stablecoins and what your thoughts are?
Yeah, we track also this very carefully. I think, again, the macro numbers seem a little bit high, but there is a ton of activity, obviously a ton of activity in Asia. So if you look at something like Tether, is disproportionately used in Asia. And I think a lot of DeFi is also moving the space. So there is a ton of activity in liquidity pools with stable coins. And it's a good gateway to get in and out of DeFi protocols. So it's becoming more and more adopted. And if you think what Tether, the type of questions we were asking about Tether a couple of years ago and where it's at today, it gives you a good indication of the maturity of the space. So not sure about 100 billion, but definitely here to stay. And one thing is, you know, if there is a push by a government central bank with a stable coin, or whatever happened with Project DM from Facebook, is I mean, it could be a catalyzer to all this.
I would agree with Jesus. I think it's proportionally going to grow with the entire market cap of the industry. If you look at it right now, it's 25, like just Tether itself has 25 billion market cap. And I think as Bitcoin and other crypto assets will grow, it will also increase the needs of stable coins to grow together with other crypto assets, just because people sometimes have to go out of the positions in Tether. And by the way, I think you and Cindicator know know it pretty well, right? You know, because your models are constructed with taking into account the Tether as well. So yeah, I think a very simple answer, yes.
Okay, the next one. So I think we went around the question around DeFi hitting 50 billion in terms of total value staked. Ethereum, will it hit 10 billion, which is like 20% of the whole DeFi? Both crowd and especially the super forecasters mentioned 88% likelihood of that happening. Do you guys agree or disagree?
Go ahead, Konstantin.
I love you throw me under the bus for this tough questions.
I mean, we can go on to the next one. I mean, these are the sentiments.
No, it's fine. We actually wrote one of my colleagues, you know, Jim Molinar. We co-authored Ethereum 2.0 research paper. It's on our website, so available. We didn't predict any prices there, but we just analyzed one of the vulnerabilities and one of the benefits and like just the core ideas. In a nutshell, I think 10 billion, it's not a crazy number. I would say there are different type of concerns that we discussed in the research paper. Not to, you know, we don't have enough time to discuss it today, but that will be different questions which I would ask about Ethereum 2.0.
Yeah, I mean, this one is not that hard. Like, if you just look at the rate it's growing, it's probably very, very likely. I mean, just a basic statistic us there. So this is one that is probably highly likely to be true.
And the fact that all the DeFi assets are traded against Ethereum, I think this event is quite likely to reach. And lastly, and this one's the last one, we can touch upon the main trends that we gathered for 2021. So as mentioned in the first panel, the growing mass adoption came top. 55% of the participants answered this as the priority, and also the main trend that's going to happen in 2021, as well as DeFi. I think you guys might have like a few points to add around perhaps like institutional adoption or any other topics.
Well, here, if you don't mind, Jesus, I can start because this topic probably I've recently researched the topic of institutional adoption pretty in details, and I would say Fidelity Digital Assets did a great research where they interviewed about 700 different institutional players across the United States and Europe, and 1/3 of them actually are now participating and investing in digital assets. So this is becoming like a fiduciary responsibility for financial advisors, any top asset managers to allocate at least a portion, whatever that might be, like 1 or 5% of their portfolio to digital assets, because it's, for the past 10 years, one of the top, if not the top, best performing asset class in the world. So they're looking at quite serious on it. And I think that will, I don't know, in the macro context, what is growing adoption in general, whether it's retail, institutional, but I would bet highly on institutional adoption, because this will bring a lot of scrutinies from the regulation standpoint of view. This will bring a lot of confidence from the markets, and this will require us to review a lot of misconceptions about crypto right now.
Look, if this forecast is true, I think we're gonna have a really boring year. So one of the things that we should love about markets is the unknowns, right? Like, I think crypto in particular, it can enable so many things. I mean, where was DeFi in 2019? Nobody could have forecasted that in terms of the adoption in 2020. So I think there is room for a category that is not on that list to be a catalyzer in the market. I'm shocked at the 3% market correction. So I'll put market correction at 200% if you ask me right now, like tomorrow, like it might happen, right? So I don't know what type of correction, but this week we're probably gonna have one. I think that that's a given. As Konstantin said, institutional adoption seems to be a trend. DeFi, it could obviously, everybody's very concerned with regulators in DeFi, what that impact could cause. But other than that, the trend is fascinating. There is really strong IP being created. NFTs is very intriguing. It's very strong. And then I will say, for other things that we haven't seen, that we're not, treasuries was not a thing a few months ago, and now it is. And so we might, the part of the magic of crypto is that it could surprise us. So.
Well, thank you so much, and I think we have to wrap up now, because it also leads very nicely onto institutional players in crypto. But before we start, we want to take a short.
Yes, everybody's here.
Great, thanks.
Great having you here. So probably this one could be one of the most interesting panels, which we call Institutions in Crypto. We have Joanna from Bloomberg, Peter from IBM, Ulrich from CoinHacker, and Nick from BitGo. We will talk here about what does it mean, institutional adoption? And we will look at this from different angles, talk about the reasons why it's happening and what actually it is, institutional adoption, how we perceive the behavior and what we expect from this year in this space, institutional world. And first of all, I want our great panelists to introduce yourself and giving you words. If anybody wants to start, or I continue.
I'll start. So I'm Joanna Ossinger. I'm a global markets editor at Bloomberg News, and I am also Bloomberg News's Asia crypto czar. I've been in Singapore for a couple years, and before that, I was in New York for about 10 years, and I was also at Fox Business managing the website, at thestreet.com, and the Wall Street Journal.
Cool.
I can go next.
Yeah, maybe. Oh, yeah, sure.
Thank you. Nick Carney, Head of Financial Services and CEO of BitGo Prime at BitGo. I've been at BitGo for a couple of years. Background is financial markets, worked at Tower Research Capital, as well as various banks in prime brokerage capacity.
Thank you. Now let's go to Ulrich.
Yeah, hi everyone. Yeah, so my name is Ulrich. I currently lead the growth and marketing strategies as well as partnerships at CoinHako. So quick background on who we are. CoinHako, we are a Singapore-grown platform that's focused on providing access to digital assets for the retail market in Asia. When I talk about retail market, it's really more mass market. So we do have a wide amount of institutional clients that's already on our platform. And we were also founded in 2014, which definitely makes us one of the oldest platforms today. So me, myself, personally, I've been in the space since 2017. So I've seen the market evolve quite a bit through two different bull cycles right now. So hopefully, I can be able to share some interesting insights with the rest of the panel and everyone in the audience today.
Thank you. And Peter.
Hi, everybody. Peter DeMeo with IBM, and you may be surprised why IBM is even on this call. We actually are in the digital asset space in addition to enterprise blockchain. In fact, my job is really responsible for confidential computing for digital assets globally, and I'm based here in Singapore. And we create technology that some of my colleagues here on this panel should be using, including CoinHako and BitGo. We sit underneath all of those guys, provide secure operating environments, making sure that the bad guys stay outside and only the good guys have access. So we've been at this for since 2018, I guess. And so I guess my perspective on this will be more from the technology side.
Good, thank you. So let's start discussing of what we see and what does it actually mean, the institutional adoption that everybody is talking about and which is booming. How we understand that. Joanna, can you start?
Okay. Well, I guess maybe I'll start with kind of a background on why it's happening now. I mean, it's pretty clear. We've just gotten a little bit more established with crypto, right? That people know what it is. You're not seeing the Google searches for Bitcoin that you were in 2017. That's not necessarily a bad thing because people already know what it is. They're not having to find out, right? So it's been absorbed into the public consciousness a little bit more. You are having the price increase, and so that's making people more confident about it. It's making the people who've been longtime holders more confident. And it's starting to be talked about as a diversifier. That's something that wasn't true, even a few years ago. But now you have firms that are saying, actually, it makes portfolios less volatile. Even an all stock portfolio can be less volatile if there's some amount of crypto in there. And this is from quantitative and serious analyses by people. And then also you have an environment where people are just looking for yield. If you're looking at fixed income or even a lot of some stocks, you're not necessarily getting as much, some parts of the credit market, and people are looking for something that can outperform. There are stocks that are also outperforming, of course, but crypto has just been doing so well, and people see it as something where, I know panelists in previous panels have been talking about this. If you put 1% in, you're not putting that much of your money at risk, but you are getting that chance for a little bit more. So it's just kind of all coming together at this point and crystallizing as we have the pandemic, where people are worried about things like stimulus flooding the system. So there's a lot going into it that makes sense as to why the institutions are coming in.
Yes, it's very interesting to think about why it's happening now, because we had a pump of the market and similar circumstances 3 or 4 years ago, and what is different now. It's very interesting to listen your perspective, guys. Nick, would you?
Yeah, I mean, I agree with Joanna to some extent, right? And if you go back to 2017 into 2018, right? I think in crypto time, it was maybe too early for the institutional clients to really take note of this product. Now, the clients are looking for more diversification from a portfolio and risk perspective. They are looking for more diversification in terms of returns, right? If you look at the market in 2020, it was quite an interesting market, whether it's the equity market, fixed income, or FX. But then if you take a step back and look at the overall complete market and include crypto in it, you'll see that crypto, luckily for all of us, outperformed the entire market in terms of volatility and performance. And that sort of was like I don't want to say a wake-up call, but a lot of the institutional clients are constantly keeping the pulse on the crypto space. This is sort of getting them a little bit more excited about it. There are still barriers to entry, of course, and we talk about institutions getting interested in it. They're talking about it. They're not afraid to understand better how the market works. They're asking a lot of great questions. They're exploring how this product could work for them from an institutional base. Now, even a lot of the institutional managers that might not be active in the crypto space, they personally are active in it themselves as private individuals, whether it's or from a family office perspective. So we're seeing a lot of interest coming in, more so probably towards the end of last year than anything else. And I think coming into this year, you'll see, at least we're starting to see a lot more interest. So it's very exciting. But again, the barrier to entry is still very hard.
Yeah, okay, so from what I'm seeing, right, I guess the easiest way to put it is there's it's kind of like a chain reaction going on right now. So I think it kind of started with big players like Facebook announcing their involvement in the market. Then you get guys like PayPal, and then the traditional banks like JPM, Goldman Sachs, and so on and so forth, right? So every other week we are seeing a new institution announcing their involvement in the market as well. So I guess in a way you can kind of say that there's some kind of FOMO among institutions right now, which is why you see a lot of money being poured into the market. And I guess like what Joanna has mentioned as well, people are really looking at Bitcoin as a new way to diversify their portfolios. I guess 2020, right? There was like all-time high gold prices. There was a lot of market uncertainty because of political, financial, social situations in 2020. And, with all these factors, right, people started paying more attention to Bitcoin. And I think a lot of the institutions that I've interfaced with personally, right, they are just, asking, whether they should get into the market, simply just putting like 5% of their portfolio and so on. And that's why we are seeing quite a lot of institutional money being rushed in right now. And I guess it also really depends on the kind of institutions that we're talking about. right? If we are talking about, say, like your angel investors, your VCs, your family offices, right? I think a lot of these guys have actually been involved in the space in the early days, since as early as 2017. I've been talking to quite a lot of family offices. Today, what we are seeing is the inclusion of more institutions like the HFTs, other FIs like the banks, as well as, I guess, more traditional brokerages who are just probably, looking to gain exposure into this market, looking for new gains and stuff like that. And yeah, as we mentioned, looking at a new hedge to like a hedge against market uncertainty in the, currently in 2020.
Yeah, I think I would just add, IBM, we kind of focus more on the institutional side, right? Because that's who we serve, enterprises. Not, although I have to say most of my clients are fintechs right now, so go figure. We see basically 4 different forces today that are going to create the conditions under which, a lot of this institutional movement is happening, especially in the enterprise. Regulatory frameworks are being clarified across the board. And, Singapore is a leader in this with the Payment Services Act and getting the sandbox or the CMS license and so forth. Central bank digital currencies, although this is a discussion on institutional demand, the fact that CBDCs are being explored by 80% of all central banks, that DCEP across, just near us in China is being trialed in many different states, that matters, right? And of course, from a technology perspective, there are a number of shifts that make investing in this space a lot safer, okay? Whereas, before everything was, in your little ledger, hard wallet that you have, or a treasure or something like that, self-custody was the norm. Today you have regulated third-party custodians who, are serving the enterprise market. And quite frankly, the enterprise institutions, they will always follow the regulation, right? They'll follow the regulation. From there, maybe they'll move into the OTC desks and lending platforms and what have you, which kind of brings me to another point. I mean, you guys are talking about like 2018, 2020, what's changed, from a market structure perspective. What about OTC desks? I mean, in 17 or so, you would pay about 200 basis points to do a trade. And today that's what, 5%? I mean, I'm not an OTC desk, but it's a lot cheaper. It's a lot more of it. It's a lot more efficient, right? The 60-day volatility of Bitcoin is, all-time lows compared to where it has been back in 2017 and so forth. I think it's something to the effect of like between 2 to 4%, where before traditionally it's between 10 to 15%, right? Lending platforms, but in 2017, 2018, there were no lending platforms, right? Today you have, especially for the retail market, you have some big names out there now, right? Well, of course, big names now, right? BlockFi, blockchain.com, Celsius, et cetera. These, of course, maybe not household names yet, but for those in the crypto industry and for those that are following it, certainly is. So, I would agree with Ulrich in the sense that you've seen a lot of especially in Asia, which is, largely dominated by retail investors, but, you have sort of the family offices, the hedge funds, venture capital firms, brokerages, proprietary trading firms, et cetera. They're all interested, in and have been investing in this primarily, I'd say recently as an inflation hedge, because, with the whole pandemic spending, no matter what country you're in, right, we all know that there's going to be monetary policy that might be introducing risk, if you will. And then, of course, that leads you to portfolio diversification. And, you've heard JP Morgan talking about, how Bitcoin and crypto really should be a part of any portfolio, upwards to even 1%. So it's a whole changing mindset. And then, I guess the last point would be what I call follow the leader. You have in the US, at least, I'm from the US, you have big names like Paul Tudor Jones, Stanley Druckenmiller, Michael Saylor, Dan Schulman. These folks are creating the cover, okay, under which those who have personally invested, like you guys were saying, at these institutions, now they can actually come out of the shadows and do it for real. And just like when you're getting your VC funding, when the first one comes through, everybody jumps in, right? It's just kind of how it is. It's human nature. And I think we're seeing some of that today.
Cool. Thank you. It's an interesting point about how many of them are staying in the shadow still. And definitely we can think that some of them, like Fidelity, made their research and asked 700 of institutions, and only 1/3 publicly announced that they did. And what about the rest? We all think that they are stepping in. Another point of discussion is if we separate crypto and Bitcoin, how we think about the rest of the assets. Definitely Bitcoin is the entrance point to the crypto, and definitely institutions are stepping to this gateway and building products around Bitcoin. What about the rest? How do you think? Will they step beyond to Ether or maybe other digital assets in the nearest future, in this year, or maybe it will happen next years? Is there anyone who wants to start?
Well, I'll kick it off. You guys can go ahead and tell me I'm wrong, because I'm not the expert. I'm just an IT guy. But for me, Ethereum, of course, is it is the alternative store of value to Bitcoin, right? And it also is, more importantly, the basis of an entire ecosystem for a whole new financial systematic evolution, if you will, right? I mean, and that's of course DeFi, right? So you have the ability to reinvent financial products and services using open source, decentralized software, right? And the cool thing about it is that you don't have to work at a bank in order to develop this. You can just be anybody. You can be any engineer, and you can deploy stuff out there, and people can start using it. And all of a sudden you have massive competition now for the banks. And of course they're scrambling, right? So I think, DeFi is absolutely critical here. But also I think we're seeing, again, getting back to the enterprise side, a number of my clients are getting into the whole treasury management space, if you will. Okay. So digital treasury management, because treasurers at major corporations like IBM, in fact, they're trying to figure out different strategies to manage their liquid assets, right? I mean, who knows? Global interest rates could ultimately maybe go, negative at some point, and with quantitative easing, corporations with large, treasuries are going to want to do something like that. And you think also with Onyx, with JPM, being able to then move that treasury around, in a way that dramatically reduces the costs and the risks of doing so, I think is another factor. And then I think, because we are seeing, if you will, markets maturing, especially in Singapore, I dare say you'll see more traditional pension funds and endowments start to moving into the space too, right? Because, I think it doesn't take too much to see that, today we are seeing the same levels of liquidity in crypto markets that you normally would get in a traditional market over the span of a decade. So things are happening really fast. And I think that's creating, again, the conditions under which, Ethereum leading the way with Ethereum 2.0, but I dare say there's going to be others as well that will continue to contribute to decentralized finance outside of Ethereum. But I'd like to hear from you guys.
I'm not sure I agree with you, Peter, that the banks are scrambling, but I'd love to know what you mean by that.
Come on, Standard Charter.
The banks are not scrambling, but not that I'm a bank defender, but the pension funds. We're talking about the pension funds and the endowments, right? The crypto market is still too small for these guys, right? I'm sure they'd love to get into it, but like I said before, there are a lot of barriers to entry for many of the institutional clients, right? And we at BitGo, we're a custodian. We provide a lot of safe products to be able to allow such clients to come in and be able to custody their assets and security and borrow and lend with us and even trade from the security of their cold storage and custodial wallet. But if you look at at the market itself, right, it's not big enough. I mean, if you look at the financial markets, when a pension fund comes in or an endowment comes in and they want to get into a product, they'll get into it with hundreds of millions of dollars worth of capital, right? I mean, it's $1 billion, buying $1 billion worth of a 10-year bond, or buying, $300-400 million worth of IBM stock, or whatever the case might be, is a very small transaction for these endowments. They can't replicate that in the crypto space. So what you're starting to see, Guggenheim was in the news a couple of times in the last couple of weeks. They want to get in, and they want to start a small investment vehicle where they can allocate some crypto strategies and risk to it, and that makes sense, right? Because they can't, Guggenheim as as a large corporation, they can come in and say, we're going to just buy 1% of our NAV into crypto. The market is not big enough for them. So it's important to what's important is for us all to continue building the rails, right, to make it easier for the institutional investors to come in. Whether it's the technology rails, the operational rails, the trade rails. I agree with you. We talk about the spreads, and I'm not sure if I agree with going from 400 to 5 basis to 5, but I get your point, Peter, about spreads compressing. There are a lot more OTC desks now. There are a lot of more lending counterparties now. In 2017 there were none. 2018 there were less than a handful, and 2021, who knows? It's like it's endless. So again, there has to be some more normalization in the market to be able to encourage the large institutional investors to come in.
Yeah, I guess for me, right, definitely I think we can see more institutions transitioning to alternatives besides Bitcoin, simply because of the way the market, people in the market behaves, right? I think it's there's something called the stages of discovery. So what usually happens is people start with discovering with Bitcoin, right? That's always the case. Same for the retail market. And I guess it would be the same for the institutional market as well. And then maybe, they invest in Bitcoin, they earn some, and they start realizing that there's this entire world out there of bigger gains, and, bigger gains are bigger gains, right? So definitely, I think once people have played around Bitcoin, they will start turning their attention to more alternatives, and Ether will always be a starting point for most people. At least that's the data that I've been seeing so far. And then I think with that said, definitely we can see more institutions having at least Ethereum, in their portfolios in the next few months to years as well. Then an interesting thing as well that's being floated around is the term blue chip cryptos. So correct me if I'm wrong, but from my understanding, this comprises of Bitcoin and Ether right now, like just these two. So I guess, what we will see is to have a properly diversified crypto portfolio in the next few years, you would definitely have to include both Bitcoin and Ether. And I guess, maybe some project like maybe Polkadot that's already in the top 4, it might get into prominence at the same level of Bitcoin and Ether and maybe be included in that blue chip discussion as well. So definitely we will see more institutions adopting more coins going forward for this reason. And I guess if you are talking about exposure, right, whether it's direct or indirect, what is being talked a lot about right now is the Ethereum ETF. I don't know if you guys have heard about it. I think there is a lot of talks right now. So maybe, institutions might not want direct exposure to crypto, but they would definitely want some kind of dollar price exposure, like just in the form of an ETF. And I think, if they don't buy the asset, this would definitely be of a bigger, this would definitely have a big impact in the entire market in the next few months, if it actually happens.
Yeah, and I would say, just adding to that, there is probably work to do for any crypto beyond Bitcoin and Ether that would be in that top tier. I mean, most institutions really are talking about Bitcoin at this point, and then there are some who are also getting into Ether, but it's even still some resistance to those two, right? And you still see some hesitancy on the part of many people. So going beyond that might be a little bit tougher. You do have some things like, for instance, the Bloomberg Galaxy Crypto Index has Litecoin and Bitcoin Cash and EOS in it. So you sometimes will have a few other cryptocurrencies that are mentioned in terms of something, and some of the studies about diversifying, for instance, have talked about a basket of crypto. So maybe you get to the top 5 or 6 where people might have a little bit, but really most people who are talking about getting in it's still pretty much Bitcoin, and then people who like the technology and the foundational aspect, Ether as well.
Yeah, it's interesting to look at and trying to imagine this institutional adoption. How could that be with a smooth process or with waves. Like we may see the first wave of institutional adoption now, and then at some point we will see some other wave, or maybe in 1 year or 2 years, and then another, or that be a smooth process. Definitely for this switching, going beyond these assets, we need these rails. And how can we define the barriers that still remain here on place, that are not giving them opportunity to go faster?
Maybe I can start on this. So I guess a simple way to put it is just that there's still a lack of understanding in general. Yes, money has been growing, the capital inflows has been growing, but I think the general public is still very unaware about what the technology is all about. I think one way to put it is that the general consensus in the entire public so far is that we need some type of governance, right, to actually have a functioning financial system. And I guess at the core of Bitcoin, it talks a lot about decentralization, which is basically a governmentless kind of monetary system, right? I think for most people, this is just very far-fetched, like because you grew up on a system that money is like run by the government, and like for most people, this is going to take time to register, right? So definitely that has created a lot of resistance in terms of people that have talked to me about wanting to come into the space. I guess on top of that, there's also a lack of regulatory clarity. For example, right, in Singapore, I think Peter already mentioned, we have the Payment Services Act, which will be the regulatory framework governing the crypto space here in Singapore. But what's happened is that their licensing has been delayed over and over again. I think the announcement came last year in January, so it's been a year, the licenses have not come out. I think, until that is cleared up, the capital inflows will stop, because I think investors wouldn't want to be committing into like this space if regulatory uncertainty is going to be there. So I think as long as the governments do not clear this up soon, this will stop the capital inflows from coming to the space. And I hopefully, I will not result in a case where like the market crashes again and we go back to a crypto winter in 2018.
Yeah, that's a good point. I agree. Regulatory uncertainty is one of the barriers to entry into this space from institutional investors, right? The other barrier is the inefficiency of the way the market operates, right? There is no fungibility between buying crypto on one exchange and the other. There's the movement of coins is not as once you're in the space, you get used to it, so it becomes very familiar, right? When I moved from financial markets to the crypto space, it was much easier for me to adapt to the way things were operating and get to streamline the process. When I was working on crypto in the financial markets, it was a lot more cumbersome for me, because I was already more focused on the financial market side. So the educational process is very important. We spend a lot of time educating a lot of institutional investors into how things operate, how things work, what we do, how do you control risk, and that's I think the job of everybody on this panel and everybody that's in the crypto space. If you want more institutional adoption, you need to spend a lot of time educating people that are not in the space the way we are, right? But there are also other tools that companies like BitGo provide to the institutional investors to make it easier for them to be able to come in and say, hey, I want to have skin in the game. I want to have a certain portion of my AUM invested in crypto. How do I do this most efficiently? How do I do this most securely? We provide that type of service to our clients, and have been very happy with it. We just need more adoption and more support.
Yeah, I would just want to build on that by saying that, if we think about, traditional financial institutions like, take some American firms like Schwab, TD American, Ameritrade, Fidelity, what have you, they need to have structures that they're familiar with, right? An ETF or securities or what have you. And so far, those kinds of things, because of regulation, have largely not come about. But that's what's necessary in order to ultimately get the general public to view crypto as less than legitimate, if you will, in the world of finance. And other areas to think about too, from a barrier perspective, is really being able to make liquidity and transaction velocities adjustable solely based on business reasons and not due to security limitations, right? Every time we see a rise or a fall in Bitcoin, we see, without question, and sorry, I don't want to name names here, but I'm going to name names anyway, Coinbase going offline. We'll be back later. Why is that? Because liquidity, I'm assuming it's because of liquidity management, right? As for a lot of exchanges, we've seen some instances here in Asia with respect to, Thailand most recently. So the notion of, having cold storage as, the go-to way to store your crypto, if you will, I think definitely is something that needs to be explored greater than it has been. We're looking for things like omni-temperature wallets, right? Where basically you got real-time access that's governed by strict policy execution, and quite frankly can automate and pull assets into a hot wallet, if you will, on demand, as opposed to having some human get involved and I'll be right back. I mean, think about it. If you were like PayPal, right, and you're a merchant and you're doing your card and the guy's, I'll be right back. I got to get some money out of cold storage. I'll be right back. Really, no problem. That's not really reality, is it? I actually am heartened by somewhat. If you're following the DSEP, they have these cards that basically are hardware wallets that you store their coins, if you will, in an offline manner. You can have offline transactions, and they are quite honestly anonymous. At that level, at the correspondent banking level, of course, they can be pulled back for de-anonymized, I should say, for reasons of fraud detection, what have you. But the ease of use, making it easy. Like if you're a person, just general public, why should you care about private keys? Why should you care? If they have to care, we haven't got there yet. To me, it's this self-custody notion, which continues to be, I think, a drag on the whole crypto industry. I think it's a problem that's solvable, however, with the right minds.
I would add volatility, even though, as Peter mentioned, it is lower, it's coming down, it's still a concern for institutions. JP Morgan has mentioned that as a big issue in terms of crypto versus gold. One other small thing that could be in the background is ESG issues. It just because Bitcoin takes so much energy, there could be concerns on that front where people say this is not great in terms of ESG. There hasn't been a lot of that yet, but there's been a little bit of discussion of that. And just since ESG is becoming a much bigger thing, we'll have to see if that becomes an issue. But I would say, apart from what all the guys have mentioned so far, volatility is probably one of the main things.
Thank you. Yes, it's an interesting point about ESG. I've just heard not so long ago that there are solutions of mining stations that are built in ocean, so they are using the alternative sources of energy and cleaning the air at the same time. But yes, if we talk about these barriers and evolution of institutional adoption, and if we try to imagine this evolution going in phases, let's try to imagine how these phases may look like. Like, what are the steps and what are the products that will evolve, and how institutions will bring crypto to market. What is the beginning? What we see now, I guess the first step is custodian and different cold stores. But what will be the next phases of those products? How do you think?
That's a great question, Yuri. Custody is super important to this this ecosystem, to this space, and I agree with Pete with some of the stuff that Peter said earlier. You know, what is the evolution of this? Again, it's they need to come in. There has to be a reason for them to come in into the space, just like many others did and are currently doing. The next step is, in my opinion, is how do you know, somebody needs to figure out how to create the fungibility between all the exchanges, right? And that is a very big hurdle. Right now, if you are in financial markets, right, you can be buying equities in any market, and you would be clearing them with one counterparty, whether it's a bank or a prime broker. In general, it's your prime broker. If you are an active participant in the financial in the foreign exchange market, which is very much closely resembles the currency market, the cryptocurrency market, you know, you can buy dollar yen with a market maker, you can sell dollar yen with a bank, you can buy euro pound on an FX exchange, and you can net everything through your prime broker, through your central clearing counterparty. And that creates that when these products, it took a long time for, you know, the first FX prime broker came into the market in 1997. And I think, you know, it took like 3-4 years before the second one came in, and so on and so forth. And similarly with equity prime brokerage and fixed income and all. And you know, the prime broker services are just another service that bundles all of the different services that the banks provide. And that creates a lot of efficiency in the financial markets, right? When the pension funds wanted to start getting involved in the emerging market sector, right? The prime brokers had to think about how do we apply emerging market bonds or equities or NADRs and NDFs into our suite of prime broker services. How do we clear them? How do we settle them? How do we manage the risk? And once they were able to find a solution for these products within the current construct of what they were doing, the emerging market exploded, right? Similarly with crypto, it's like how do you create more efficiency in the market? So when the pension funds come in and they want to trade on multiple exchanges with multiple counterparties, they don't have to worry about managing all these different accounts across the ecosystem. It creates more risk for them, not only market risk, but operational risk, which is very important.
I guess I can go next. Okay, so I guess for me, I'm not going to predict, you know, what's going to happen, but more so of what needs to happen in the market and how at least B2B platforms need to evolve across the next year, right? So I think B2B platforms, okay, normally how institutions get in and out of the market is primarily through OTC desks right now. There's quite a lot across the world right now, which are pretty prominent, but it's a very singular service layer that they provide, just purely OTC. I think based on all the market, all the different institutions that I've talked to over the years, you know, they are really looking for more comprehensive services on platforms, right? I think, yeah, and that's where a lot of these OTC B2B desks will have to evolve into becoming a full suite of financial services rather than just providing the OTC function. I think, like I mentioned, we are going to expand our institutional offerings this year. It's actually, the website's already live. It's called privé.coinhako.com. What we'll be bringing to the market is, I guess, one of the first platforms in Singapore to be providing a full suite of digital asset services, i.e. like a bank for digital assets, right? We'll be doing things like white glove services for our clients, as well as ensuring the institutional levels of liquidity for our clientele. I think, with once regulatory certainty is more established in Singapore, right, we will likely see more replicas of similar services as well. And I think, in fact, if we've actually been following what's happening in the Singapore market, right, quite a few local banks have already signified, that they intend to capture this market as well. I'm not going to throw out names here, but it's all out there in the news already if you want to check it out. And I guess on top of that, so this is not just institutional, I guess generally platforms in general, right, will have to evolve to offer not just trading capabilities, but some type of interest-bearing products as well. I think the DeFi space has really taken a lot of has grown a lot this past year, and is definitely in the top of a lot of FIs right now. And I think this is something that you have to offer, or you're going to lose your clientele over the next few years. Yeah, and definitely we will see more and more platforms going to the yield-bearing space in at least towards the end of this year.
I guess I would just add that Grayscale, I think, is viewed as a pretty attractive business model at this point. And it looks like there are going to be some products that come in and try to compete with that. Grayscale has been doing pretty well, and institutions have come in and they like the format, so they don't necessarily, for reasons we've discussed, they don't necessarily want to try to get Bitcoin themselves, but they can use the Grayscale vehicle for it. So it'll be interesting to see how Grayscale does and what competitors come into the market as well to go up against that.
Yeah. Is there anything anyone wants to add? Or here we can move to ending our session. It was a great panel and great summit. Thank you, guys.
Thank you for having us.
Thank you very much.
Thank you very much.
Thank you very much. Okay,
And,
thanks for having me. Bye.
Everyone that joined us and listened. We are happy to make this conference and contribute to growing connections in the space. And hopefully we will see massive adoption of crypto this year and next year. And it's so exciting to participate in the life of this crypto space. It's going crazy, and at the same time, it's very important and seems like it can change the life of many humans to best. So I wish everyone be happy, be wealthy, be healthy, and have a good day. So here I can say bye-bye to everyone.
Bye-bye. Thank you.